welcome you all to BYOB Market Talks, Nigeria. And we are definitely going to walk in those affirmations, BYOB worldwide. Good evening, Chattanooga, Covington. All right. So, what are our affirmations, guys? What are our affirmations? Our affirmations are I am a BYOB master trader. I am the signal. All my trades in profit. I am 777. Good evening, California. But definitely. All right. So, this is BYOB Market Talks. My name is Tasha M. Dyer. I'm the Trade Whisperer, creator of the BYOB Cash Out Strategy. And so, tonight, what we're doing is we're talking about taking you to the basics. Okay, we're talking about going back to the basics. Good evening, Milwaukee. And so as I go ahead and get my screen shared together here with you guys, let me get a 111 in the chat. If you are new to our call, let me get a 111. And if you are still learning how to cash out, let me get a 222. Let me get a 111 in the chat if you are new to our call, and let me get a 222 in the chat if you are still learning how to cash out. All right, let's talk about this. Let's go ahead and dive in. So welcome, and welcome back. And so what I'm actually doing right now is I am sharing my screen here. Let's get this together. Awesome. All right, so as I begin to share my screen and as we begin to dive in here this evening, let me officially once again welcome each and every last one of you all. And I want you to understand that tonight is the basics. And tonight, what we do is we slow it down for each and every last one of you all. So you can definitely, just kind of walk through and understand exactly how to cash out. And for those of you all who are new with us, for those of you all who are new to our call, right? What I definitely want to do is I just want to officially welcome you and help you understand what it is that we do and how we do it. So of course, tonight is BYOB Basics. We take it back to the basics. We are definitely walking you through the BYOB cash out strategy, helping you understand how to effectively navigate the markets. And then also what we do is on Thursday nights is we focus on tools, training, and skill set. And then of course in the mornings, Monday through Thursday, 5 a.m. and 9 a.m., we take what we're learning here and we show you how to implement it. So that is what we do. So as you guys continue to log in, make sure you drop it in the chat. Let me know where you're calling in from. And I definitely see a few of you all still joining us. And so we definitely BYOB worldwide here. So as I stated, this is the basics. Now, what I'm going to do tonight, so you guys have complete clarity and understanding, is I know that we've done some HFX, and I see the 777. I definitely see the HFX 777 in the chat. So that is definitely something that's exciting. But I definitely want to keep tonight true to its course and true to its nature of basics and understanding the basics. And I say that because no matter what we're trading, whether it's HFX or whether we're trading traditional Forex, the reality is that we definitely have to, understand that the support resistance, understanding the strategy, all of that is equally important as we dive in and as we navigate. So we're going to talk about the strategy. Probably I'm going to do a little bit of analysis here based on the time that we have this evening. Also on top of that, so that's ultimately what we're going to do is walk you through this. And, hopefully we'll have a little time to really stress and give you the importance of the support and resistance, because that is ultimately important as we dive in and as we navigate. All right, no matter what it is that you're trading. So let's go ahead, and I'm looking for this. You can see that I'm having to widen up our GBPs because we definitely had a little spike, right? We definitely had a spike that happened with our GBPs. If you notice, for those of you all still in this trade, this was definitely a trade that we analyzed this morning. And as you can see, it's hit a take profit too. So for those of you all who took profit on this already, let me get a 777 in the chat. I know many of you all definitely were taking this trade and have been in this trade. There's my 777. That is nothing but a withdrawal in the market. Definitely. You put that buy stop in there. Look at you. I'm so proud of you. That is phenomenal. I love it. I love it. So look at all of you all taking profit. And I know many of you all definitely go to that take profit one. Some of you all will actually touch that take profit two. So I definitely know that we're still in that upward momentum. And so you can definitely see that we definitely hit that take profit too. And it's actually in that correction right now. But let's go back over here because I want to walk you through the strategy. So each and every last one, right? Each and every last one of these kind of spiked out. And so I had it set up. Now this one actually spiked down. I know, right? So let me pull a different currency and let's analyze from there. Because you see that spike down. So GBP had a some nice strength to it. So, and you see all of them are actually still pulling. But what I want to do is what we're going to do is analyze from a different currency, and then we'll go back to the spike because I really just want to focus on the BYOB cash out right now, from a perspective where it's very clear. All right. So this is what we have right now. So here we go. Definitely right here. So we have our three indicators. So for those of you all who are new, once again, welcome. And so every call, we're going to break down the strategy. Every single call, we're going to walk you through it and we're going to show you how to implement it. But if you have questions, comments, even questions, comments, testimonies, as we're going through this evening, drop it in a chat so we can definitely help walk you through this. Okay. So here we go. Let's begin. I have three indicators. All right. I have three indicators. I have my stochastic, I have my Hikinashi candles, and I have my PSAR. So let me make this a little bit bigger for you because I definitely want you to understand. My stochastic is here. This is a leading indicator, which means I'm looking at this first. Okay. This is in my stochastic, which is a leading indicator, which means that I'm looking at this first. So what that means is that I'm looking for this to have some momentum to it. This is a momentum indicator. It's going to give me an idea and understanding as far as what the market is doing and where the market is going. Now, what you see is I definitely see that I have my blue line cross over the red. That's what I'm looking for. Now you notice this runs from 80 to 20 in this shaded area. That's what this runs from. So you notice that where I have my stochastic, I'm looking for that blue line to cross over the red and a downward momentum around the 80, or I'm looking for my blue line to cross over the red and an upward momentum around the 20. That's ultimately what I'm looking for. Now, this is my leading indicator, okay? Now, these two are lagging indicators. I know for a fact that when we look, our eyes focus on the top. You know, our eyes are going to focus here. That's not where I want you, okay? That's definitely not where I want you to be. Where I want you to be is focused down here first. This is leading and this is momentum. So that blue line crossed over the red around that 20 and that upward momentum, that blue line crossed over the red around that 80 and a downward momentum. So that's going to give me that setup and indication that I'm looking for a sell or a buy. Now, you notice that here we're on the 15-minute chart. Yes, I'm on the 15-minute chart because this is the foundation, okay? Now, when I say foundation, what that ultimately means is, you know, on average, within your first 14 to 21 days, you're going to be able to understand, analyze, and kind of look at this and be able to begin to navigate and understand how to take some profit, how to take some trades, okay? That's ultimately where this comes from. So what we're doing is showing you how to get in the market, out of the market, but I'm stressing this, that this is the foundation, but it's not where you stay. All right, this is our foundation, but it's not where you stay. You ultimately want to make sure that you are definitely advancing your skill set, which is going to advance your profits. We're always focused on the education. We're always focused on advancing our profits. We're always focused on that, all right? So now, blue line cross over the red in an upward momentum, which says I'm looking for a buy. Now, if I come and I begin looking here, all right, what I'm seeing is I have that green candle. All right, I got a green candle with a flat bottom and a PSAR flip to the bottom. These are what I call Hikinashi candles. All right, let me show you the difference. There is a difference. These are our traditional Japanese candles. You notice that You notice the tug of war. Good evening, Alaska. You notice the tug of war that's going back and forth with these, okay? The tug of war, the buyers and sellers, you can see all the activity that's actually transpiring. Well, these are what we call Hikinashi candles, and they are trend candles, okay? That's what they are. They're trend candles. They're very nice and they're very smooth. And so what you're looking for is that green candle for a buy. I'm looking for that green candle with that flat bottom, all right? That's what I'm looking for. And then of course, for a sale, I'm looking for a red candle with a flat top, okay? So that flatness is what we call price action with a twist. You notice that when we looked at our Japanese candles, that we have to analyze, we have to read them, we have to understand what each candle means. Do I have a doji? Do I have tweezer tops? Is it an engulfing? What type of candle is it? And that's ultimately what you have to read with the Japanese candles. Well, when this begins to push through, they go flat. And so what they do is they actually interpret for you. What they do is they actually interpret and translate for you. That's ultimately what they do. Now, blue line cross over the red in an upward momentum. You notice then I have a green candle with a flat bottom. And so now my piece are these dots that are on here, okay? The dots. The dots are what we call a parabolic stop and reversal. All right, that simply means that just kind of look at where they are. If I'm buying, it's like just kind of imagine that they're on the bottom of the candles and they're pushing the candles up, they're pushing the momentum. It really simply means it's a trailing stop loss. It's a stop loss that's moving with the candles. That's ultimately what it is. So that means that our stop loss is going to go below the PSR or it's going to go above the PSR. That's what it means. If I'm buying, it's at the bottom. If I'm selling, it's at the top. So as we look at this, all right, and as we understand this, that blue line cross over the red and upward momentum, I have a green candle with a flat bottom and I have a PSR flip. So what I'm going to do right now is I'm going to grab this arrow. And when I grab this arrow, I'm going to drop this arrow right here. Now, while you're trading, like if we were analyzing right here, you wouldn't touch the arrow. As I'm analyzing right here, I definitely would not touch this arrow right here. I mean, I wouldn't put an arrow here because I'm look at what's to the right of this, space and opportunity. So what we're doing is having to understand and say, you know what, where's the market going? What is the market doing? Okay, where's the market going and what is the market doing? And so this is why we don't know where the market is going to fall yet. So it's important for us to analyze it. When we're here, the arrow is for pass. I'm stressing that because I don't want you all taking an arrow. I don't want you all taking that and actually dropping that on there. Like I just don't want you putting an arrow because it's going to impact your reaction time and how you analyze. But it's important for us so we can all collectively look at the exact same spot at the exact same thing. All right, that's very, very important. Now, let's talk about this for just a moment. All right, let's talk about where you get that lineup because we know that the stop loss goes down here. So let's talk about my lineup. So stochastic, blue line cross over the red in an upward momentum. Then these two happen. These two happen to happen at the same time. I mean, this is almost like the perfect setup. This does not happen. All right. Not on a regular basis. I put this here so you can see that you have the crossover in an upward momentum, flat bottom, PSR flip. All of that happened right here. And that's definitely not the norm. Like that's definitely, this, you have your leading and lagging happening at the exact same time. Now, as I look over here, what you're going to see is it did not happen at the same time. You notice as we were looking for that sell, we got that crossover right here. And then you notice we had to wait. All right. You notice we had to wait for a flat top and we had to wait for a PSR flip. All right. So you notice that we had to wait on that. And that's okay, right? That's definitely okay. And I'm saying that because what this shows you is how this one is leading, how this transpires and this happened first. And then, of course, as it pulls, you can see that we had to wait on the two lagging indicators. And so what I'm going to do is I'm going to put this arrow right here. So ladies and gentlemen, this is literally the BYOB cash out strategy in its simplicity. That's the strategy. But what we're going to do is we're going to add the time frame confluence to it. Okay. So we know that we have the lineup here, okay, where our two arrows are. But now what we're going to do is we're going to look at and we're going to add that time frame confluence. Now, when I go to my hour, I need to have something that's showing me that this is still buying. I need to have something showing me that this is definitely buying or selling based on what my arrows look like. So when I look at this one, we notice that this had been buying. Honestly, this is not GBP, so we're not dropping down to the 30-minute. For those of you all who are new to the call, GBP gives us an exception to the rule. So let me go ahead and show you really quickly what I mean by that. So GBP, if I have something that's in a buy, I can drop down to the 30-minute because GBP has a significant amount of liquidity in the market if it's showing and kind of analyzing. Honestly, with both of these, I wouldn't have took those trades, just based on what we're seeing here. But let me highlight this to you. Let me highlight this. All right. Because I want you to understand, regardless of where it went and what happened, perfect practice makes perfect. Perfect practice makes perfect. How you practice is how you operate. What you implement is what you do. And so now, this could have possibly been a green candle when you analyzed it, all right? So I'm going to talk to you from both perspectives. So this was a random pick, so we're just going to we're randomly going to talk about it. So now, when you look at this and you see that this is a red candle right here. So I'm doing my confluence, okay? I'm definitely talking my confluence right now. And so that means that what I'm looking for is this to be in that upward momentum. I'm looking for something to give me indication of a buy. Now, we know that how the market moves, okay, from the academy and beginning of your educational journey and your educational process, you know that the market, obviously this is in an upward momentum. You have your impulse, correction, continuation, correction, huge correction, continuation, correction. That's what that looks like. And then of course it continued. All right. But I'm saying all of that to say, even without knowing that, right, you can look at this. If you're new to anything, whether you're day one or day 101, what you know is that this is in an upward momentum. I might not know impulse, correction, continuation. I might not know my support and resistance lines, but you know green and red. And I can look at that and it's majority green. So even if we got up into that point, let me cover up these last few candles. You're looking at it right here. This is where we would be at. You're looking at that. We have majority green right there on that higher time frame. We know that our momentum started here and we've been moving up. So what does that say to me? Because had this been green and had this is actually pointing upwards, had this been green and it's giving me some upward momentum, there is still some space and opportunity for me to take a trade right there. So let me drop down to my 5-minute. I drop down to my 5-minute. Now, higher time frames tell me where the market's going. Lower time frames, higher time frames tell me where the market's going. My lower time frames are all the activity. Higher time frames is why we always need to check my higher time frames and understand where we are. My lower time frames give me all of the activity, okay? And so that's going to determine my entry points. That's going to determine those things. Like, that's what that is. So now that I know I'm down here on my 5-minute, what you're seeing, okay, what you're seeing on this 5-minute chart, all right, is the fact that it's still buying. So if this was not green, if this happened to be red, we know we're not taking the trade. So we definitely know we're not taking this sell over here, but we definitely, because I mean, look at the solid green candle. It's obvious it's a pullback, but look at the solid in that green, all right? So if I go back to the 15, let's look for one that actually played out. Now, this did give us some pips because I want to give you one that actually played out. That went 27 pips. But remember, it doesn't matter because if it was not a valid trade setup, perfect practice makes perfect. Perfect practice makes perfect. And so we want that setup, okay? We want to make sure it's that setup. So you have to be comfortable with not taking a trade. You have to be comfortable with understanding that I'm going to take the trade or I'm not going to take the trade. We chase the skill set and not the money, all right? We chase the skill set and not the money. So let's go ahead and look at, if you chase the money, you'll never grab it. You chase the skill set, you'll always achieve it. You chase the skill set and not the money. All right. If you chase the skill set, the money's going to come, because I can guarantee you that when you see something like that, it either will or it will not work out. So let's show you one that definitely played out. So blue line cross over the red in an upward momentum. You notice though, right? You notice that right here, what you're seeing is where that crossover happened. I can start from here or here, like that crossover happened, and then of course we had to wait. We don't touch consolidation, guys. We don't trade consolidation. You know we don't do that. So once it came out of consolidation, let's go ahead and look at the hour. When I look at the hour, you can see that blue line, look, my stochastic is in that upper momentum. I actually have a green candle. Let me stress something to you, because once again, here we go. We have a PSR flip. Let me stress something to you, what it looked like. You're not waiting on a flat bottom. You're not waiting on that PSR flip. You're looking at my stochastic and my candle. What is the overall momentum setting up for? Now, if you get a confirmation of a stochastic and you get a confirmation of a Hikinashi candle, if you get those things, then that's wonderful. If you get those things, then it's significant. If you get those things, it's fantastic. So we had a PSR flip, okay? Definitely have a PSR flip. So that's great. But at the same time, once again, I didn't need that to confirm that I could take this trade, because I'm trading on the 15-minute chart, which means that all of this is aligned on the 15-minute chart. So that's where I need all my indicators to align. Now, if I drop down to the 5-minute, when I drop down to the 5-minute, okay, my 5-minute needs to still be buying, which it is, okay? So now you see that what we're looking at, okay, is the BYOB cash out strategy with time frame confluence. Now, how much do you trade? How far can you go? Well, with this, each one of these is to the very first support resistance line, okay? We know this one we didn't take, so I'm gonna put an X on top of that one, because if I can find my X, where is that? Let's just use this one. We're gonna put an X right there because we know we didn't take that trade, okay? So let's just put that X right there so we don't even think about like analyzing that. So we know right here, this one is going to be 10 pips in cash out or to your first support resistance line. 10 pips in cash out or to your first support and resistance line. All right. Here, the exact same thing. So had that been green, okay, I'll answer that question in just 1 second. Had that been green, then it would be 10 pips or to your first support resistance line. So that first support and resistance line is somewhere up in here, and then of course you have that other one that's up in here. And so that's where you would have ultimately taken that trade to. So let's see, you say I have a question. What if the flat candle generates a wick even if confluences are correct? So now remember, this candle is only 15 minutes, all right? So let me help you. That's a really, really good question. So normally when that flips and you have it, then what's going to happen is you'll be able to get into that trade with that flat bottom. Because let's look at this. Let me get rid of these lines. That's a good question. All right. Excuse me. So let's see. All right. Let us see. So as I look at this, okay, let's look at where these support and resistance lines are, right? Let's look at where these are. All right. So if you're looking at this, okay, right, as you're looking at it, what you're seeing is the simple fact that look at where that flat candle comes, okay? Look at where the flat candle comes. Now, let's just drop support and resistance. We're going to go over these in just a minute. We're going to talk support and resistance in just a minute because I want you to understand that, right? So as I look at this and you understand it, what you're seeing, right? What you're seeing, like let's say, I want to highlight, I want to zone in for you. Let me get this. So look right here. All right, I want you to focus in right here. What do I see when this happens? When I get a flat candle, I'm pushing through a support resistance line, right? So let's come over here. Let's look at this one. All right, because remember you have multiple support and resistance lines on here. I'm gonna use the ones I already marked up. Now, what are you seeing here? All right, you're seeing that when I get that flat top, I'm pushing through a support and resistance line, right? That's what I'm seeing. When I get that flat bottom, now right now you see I'm not analyzing, right? I'm not analyzing what it's doing, but look at what's happening when I get that, alignment that's kind of happening. You know, I'm not going to check my confluence and everything else at this moment. I see this one over here. I'm not doing that, but I'm trying to make a point to you. You notice that if I'm looking at this support and resistance line right here, all right, look at where it is. This is that support and resistance line. You can actually adjust this one just a little bit. You know, if I look at that line and you come back down here, you can see where that support resistance line is. You notice how all of these are definitely at a spot where it's pushing through a support resistance line. You see it? Voila, right there, right there. So basically, you notice how when we enter a trade, let's drop down. When we enter a trade, right, when we did our training on the 5-minute chart, what ultimately happens? It pushes through, like you see, it'll push through, it'll come back and retest it and then keep going. Okay, and honestly, you could put another one. Let me get this other one, because as you go down, you see more support and resistance lines, right? You're going to see more. And so you can definitely see where it kind of stopped here. Now, you notice we don't draw all of these on here. I'm just doing this. I don't like my charts to look like a coloring book, but I'm just trying to give you an emphasis of you know, a point of emphasis right now. You notice how it hits on that support line, resistance line, it pulls back, it goes through it, it retests it, and then it goes up. As you drop down, this is what you start noticing. And so that's when you get that flat bottom, flat top candle. Now, on, you know, as you kind of look at this now, you'll get that, what you're asking, you'll receive that more than likely. You'll receive that more on my lower time frames, where you'll see a flat bottom or flat top candle. And then as it goes, because you know, it's only 3 minutes, it's only 5 minutes, it's only 1 minute. So you'll see a wick starting to pull out of there more frequently, more, you know. And when you notice it on my higher time frames, you notice that they don't typically push towards the wick. What they do is they push upwards, right? So let's look at this new, you know, like we have, that's an hour, we have 30 minutes left. And this 4-hour candle, this is a new 4-hour candle. You notice that it formed with the flat bottom, but you notice that you still have opportunity for the next 4 hours for this candle to push up, okay? So the higher time frames, it's less likely that that's going to happen. The lower you get, it's more likely that that's going to happen. You know, as I look at these and you see these 1-minute candles, and then of course you start seeing it. So to answer your question, as long as it lines up when you initially evaluate it, okay? Because the 15 is a really good, that's why we don't start you on a 5. That's like why we start you on a 15, because it might, what I've seen with the 15, if it does that, for the most part, you know, there's no 100% guarantee. But what I've noticed is that on the 15-minute chart, which is pretty much why we start you on the part of why we start you on a 15-minute chart, is it'll be some pullback or something, and you'll get a little bit of wick, unless it's some fundamentals that really shift the market. You'll get a little pullback there. You'll get a little bit of that. And then, you know, but it's not enough to, you know, once you're in a trade, you're in a trade. You have to trust your analysis and let it go, right? Once you're in a trade, you're in a trade. So just kind of want to point that out. You know what I mean? So does that answer your question? So hopefully that answer your questions. So, all right. So question, okay, great. Questions, comments, testimonies. Questions, comments, testimonies. This has been a BYOB cash out strategy, and I definitely want to make sure that all of you all understand it. Definitely want to make sure we walk through it. And then what I want to do is we'll talk a little bit about support and resistance, all right? We'll talk a little bit about support and resistance lines, because regardless of what we're doing, you notice that we've added things that help you understand a foundational understanding of how to take the trades. And then you know you were going back to HFX on Thursday. And so I noticed so many 777s, right? But I definitely want to make sure, definitely want to make sure that you guys are grasping that. So no questions, comments, testimonies? No questions, comments, testimonies. All right. All right. All right, so let's go ahead. So with the amount of liquidity on GU, would the PSAR stop loss be too narrow of a stop loss? Absolutely not. Remember this, these are dictated from the market. So these are dictated by the market. So you notice that, let's show you something. So you notice that sometimes the PSR is tight, sometimes the PSR is wide. So let's go to my higher time frame. You notice that we had some momentum here. So you notice that, like, look at this. Look how close the PSR is to the candles right here, right? Look how close they are. And then, of course, look at how wide it is. Look at the gap. So this is like, when I tell you guys to develop that relationship with the market and allow the market to speak to you and allow the market to talk to you, that's definitely something that you want to do, is you know, really, really, really allow the market, you know, to speak to you, right? That's what you want to do. And so what you're seeing is, you know, just, you don't want to kind of come in here and be like, well, why is this and why is that? But the reality is the market, based on calculations, there are calculations in the candles, there are calculations, because it's all indicators, right? It's price action with a twist, is using what price action uses, but it's all indicators. That's what it is. It's all indicators, okay? And so what you're seeing is the market, based on calculations, is telling you the, you know, the push, and you know, so it's telling you where you will put your stop loss. So this is a trailing stop loss that's moving with it. It's kind of like a dynamic support and resistance that's moving. So you know, so you have your support and resistance, which are the side, you know, these lines, the yellow ones that we placed on here, and then the dynamic ones are kind of moving along with it. So no, you want to do the analysis. Okay, go back to what I was saying this morning. Go back to, you know, what I was saying this morning, right? And think about the fact that, you know, I use the example of some pancake mix, right? So I get me some pancake mix. Pancake mix says add water. You know what I mean? It says add water. And then what happens, you know, what happens is you guys start asking, well, how many eggs do I need? 2 or 3? And I'm just like, I said, pancake mix, you know, just add water. It's complete. It just says add water. So all you guys really have to do is add the water. That's it. Just add the water. And so what happens is you start analyzing, we get analysis paralysis, you know, we start doing so much analysis because we're trying to make it fit into a different form, or we're trying to make it do something different, when all you have to do is add the water and follow the steps and improve your skill set from there. Perfect practice makes perfect. So the perfect practice is just add the water. And then you guys will be like, well, how many eggs do I need? I need 2 or 3. I'm like, I just said add water. And then you guys go, well, you know, what about 1 egg? You know what I mean? So we don't want to get into habit, because I've never done a training. And I mean, I'm glad you guys are asking the questions, but I wanted to walk through this with you. We've never done a training that said, wait, you know, wait for, adjust the space of the PSAR. You know, we've never, you know, done, see, I already know analysis paralysis, your main habit. We've never done a training that said adjust the PSAR. We've never done a training that says, you know, the only thing I mentioned to you guys about the PSAR is when I look at this, and like this one right here, that's 13 pips, okay? So this one is 31. So you see some trainers that tell you do a 50 pip stop loss, do a 20 pip stop loss, do a 30 pip stop loss, right? For 10 pips and this and this and that. The reality is allow the market to tell you what the stop loss. If you look at this, your 30 pips is not within your risk management, don't take the trade. Just don't take the trade. That's how you have to analyze it from, right? Even though we have a 92% accuracy rate, you should always evaluate a trade from what am I willing to lose? You know, that's risk management. That's, you know, that's how you want to look at it. So everything that you do is nothing but profit. Everything that you do is nothing but put you in a greater position. Everything that you do is nothing but help and launch you, catapult you, and move you forward. So that's always the mindset that you want to have. So, you know, definitely, definitely, definitely. And so, but then of course, that's why you can get more than 10 pips, because once again, you're balancing it out, because I can do 10 pips and cash out, or I can trade to my first support resistance line. That's another reason why they are so important. I can trade to that spot. You know, like I can trade to this support resistance line. We didn't know the candles were going to keep going down unless we analyzed it on a higher time frame. And so we've done the training, and you know, as far as helping you guys understand why we trade to that first support and resistance line and why we stop right there. So that is so you know, that is so important. So just so important. So you say my trading skills are improving the more that I am patient and practice frequently. Thank you. You are so welcome. I love it because I've definitely seen your success in your 777s. So, you know, it's that patience, profit. And so we want to get away from that analysis paralysis. We want to walk away from those things, but it's definitely patience, profit. You practice patience, profit is going to happen. Is it possible to elaborate on why cryptos are selling? So we, you know, think about the technical and the fundamental. Okay. Once again, it's market structure. The biggest thing is you don't care what it's doing. That's the biggest thing is you don't care what it's doing. You know, like this is Bitcoin. Bitcoin's already moving back up. You know, you don't care what the market's doing. You know what I mean? You don't care. What you care about is how do I analyze it and how do I take profit. This is where we have a difference in investing and trading. Okay, this is where that difference comes in, because I'll show you this. This is our markup on Bitcoin from this morning, and I'll show you this, and then I'm gonna go to support and resistance lines. So what we selling? Absolutely. If I'm investing, that bothers me. If I'm investing, I'm concerned on why it's selling. If I'm right, you as a trader, you shouldn't care if the price goes up to 100,000 or if it goes down to $100. Okay, what you're concerned about and what your focus is my proper analysis and do I take a buy or a sell? Proper analysis and do I buy or I sell? If from an investment standpoint, yes, you are very concerned that they're selling. That's an investor standpoint. But from a trading standpoint, you get your surfboard and you ride the wave. That's what you do. And you do your proper analysis, right? So what does that mean? When we mark this up, right? I'm gonna go to support and resistance in just one moment. When we marked this up this morning, what we did, you know, is we analyzed on this higher time frame. Okay, we looked at this. We know for a fact that this gave us some trend change, right? We're in that downward momentum, and so we have to look left. All right, we must look left. And when we look left, you see that these are those significant points in the market from a support and resistance standpoint. So, which is where we're going in just a minute. So if I look left, this is that. Now, the higher you get on the time frames, all right, the higher I get on my time frames really helps me understand where I am in the market. Okay, that helps me understand, should I be buying, should I be selling, you know, what's going on, what's happening with the market, X, Y, and Z. You know what I'm saying? So very, very, very important, right? Very, very, very important. So you know, so just something that's very, very important as far as what you're looking for. All right, so now as I'm looking, hold on, my phone not charging, got my Zoom on here. Well, I need to zoom, there we go. I'm like, I don't need to zoom to quick, I'm doing good with Zoom tonight. So, you know, now as I look at this, okay, when we go to my daily, when I get to my higher time frame, as far as a little market structure, what you're seeing is that it has not broken structure. So we already know that had it broken structure, or you know, had we broke this, that it was going to sell. Now I'm looking at trend change and reversal. Now you notice that we're getting this rejected, it's getting rejected on my higher time frame. So even though my stochastic is pointed straight down, we're getting rejected. I come here, you notice that my stochastic is beginning that curve up. We're starting to move back up. So what you're seeing is the rejection that's happening on a higher time frame. Our focus is market structure. Our focus is strategy. Our focus is the relationship. Our focus is being able to feel and evaluate the market and developing that skill set. I promise you, you know, from this standpoint, you know, just to kind of highlight the point that I'm making right now. And then, like I said, we'll go to, you know, we'll definitely highlight this point. And then we're going to go back to, I don't think I want monthly, but then we're going to go back to the support and resistance. But this is a point I'm making. So this was COVID right here. This is our US 30. All right, these are our indices, and this is when COVID happened, right? You notice, like, look how far the market dropped off. Okay, this, I have it on a monthly chart because I want you to get the big picture. I want you to grasp this, right? So I want you to walk with me with this. So for those people who were concerned about the drop off, for those people who were concerned about why is it selling, we knew why it sold, COVID, but it didn't matter to us because we were economically unbothered, right? This is when the market dropped due to COVID. You notice that this is March of 2020. This is when it hit the United States. That's when Apple closed its stores and everybody was like, you know what? It's a big deal. I get it. I can come back and tell you Elon Musk said that the price was too high. So ultimately, that's the fundamentals behind it. There's always fundamentals. You have different analysis. You have your technical analysis, which is my market structure, which is what I'm telling you to be focused on. You have your fundamental analysis, where you're cognizant and you're mindful, you're cognizant of what's happening in the market. We know what's happening. Elon Musk bought $1.5 billion worth of cryptocurrency, or worth of Bitcoin, shot it up. That's when we had the spike. He came back yesterday, said the price was too high, shot it down. Okay, that's fundamentals. Then you have your sentiment, which is how everybody feels about it. So that's the why. Okay, but the reality is the evaluation and you understanding to ride the wave. So right here you can see, you know, if I look at here, the US 30 dropped due to COVID. All of this happened in 1 month. Look how far down it went. So you see 31,000, you know, we talking about points, 31544, where we're currently at. This went all the way down to 18198. All right, that's a huge drop. That's a huge drop. But guess what we did? You know, guess what we did? We rode the wave and we had some very, very, very profitable months. Very profitable months. But what does the market always do? The market always corrects itself. The market always corrects itself. The market is going to put itself back in position to correct itself. And that's what it did. You notice that, look at April, okay? It was still dropping, but it pulled back. And then look what happened. The market began to pull up. Now, if I come back over here to Bitcoin, right? Let's look at it, right? Let's look at Bitcoin. It's been, right? We've been rising. Let me cut the pivots off. I want you to grab this. So we've been rising, right? Something transpired. Nice. That's a nice correction, isn't it? And then we came up. Elon Musk made a statement. But now look at how the market is beginning to correct itself. Okay. So the fundamentals don't last. We did a training that showed you of, you know, how the market pulls back and what the market does as far as reacting to the news and those things. So these are, it's not going to have, it's going to have impact on the market. It's important to understand the impact of the market, but it's important to understand that the market is going to go back and is going to correct itself to what it was already doing. So it's like, think about, you got hit, bam, you know, the market took a hit, you got spanked, you got something, and you know, your parents whooped you, whatever the case may be, it shook you up for a minute, but then you bounced back and you got back on track. That's really like the mindset where you have to be. And that's why I took a moment to kind of bring you guys back to, like, let's not focus on why it's doing what it's doing. Let's focus on understanding what it's doing, understanding how the market reacts, and understanding that you ride the wave. Okay, you ride the wave and take profit. So yes, she did make a disparaging remark for Bitcoin, absolutely. But it's not going to stop it. It's already in investment accounts and everything else. The market is going to go back. And no, you're right. Fidelity, Greystone, they don't think it's too high. So ultimately, people are still investing in it because this is a cryptocurrency. People, you know, people have to buy it just like gold, things of that nature. So that's ultimately going to be what puts the money back in there. So people are still going to buy it, but that's the emotions that people have, that initial reaction. So, but she's not the one that dropped it to that point. It was the fact, it was yesterday's comments. You see, that meeting was today, and you can see where it kind of pulled back up. So yes, it did drop a little bit more. Don't get me wrong, because we would have stopped up here where it had initially pulled back. But what you can see, because of that, what we did is we created like a little flag, and then it pulled back down. So absolutely, you just need to know how to ride the wave, and you notice how it's turning back around. We passed this point, we've broken that last significant level, and then we're back on that buy. I mean, that's where we are right now. So we want to make sure we get past that point. So you know, exactly, $10,000 minimum fund to start a Bitcoin fund with Fidelity. You're absolutely correct. However, that's why it's important to know this skill set. That's why it's important to do what we're doing with trading. That's why that's important. So let's go ahead and let's jump back over here really quickly. And what I'm gonna do is I'm gonna take these off, and I'm gonna take these off, and I'm gonna show you how to drop these support and resistance on here, because we've done training on it. You need some more additional training. Go to the YouTube channel, go back into the academy and our YouTube channel, and we definitely have that on there. But no matter what I'm gonna do is I'm actually going to break this all the way down for you right now. So I definitely want to be able to do that. I want to help you get the big picture of these support and resistance lines, okay? Because you definitely need them to trade foreign exchange or high frequency Forex, okay? And so you guys are practicing, right? We've been practicing, right? We've been practicing. Cough, cough, hint, hint. We've been practicing. So understand that we're practicing, understand what we're doing. This is definitely what I want to, there goes my 555. So this is something that you definitely want to do. All right, so now let's look at this. You see, where I'm gonna start is the 4-hour, and I want you guys to understand the significance. And so I'm just gonna kind of look around here, and I just kind of want to show you now what you're seeing. I'm gonna drop the stochastic because I want you all to see the market, like pure market, okay? Because we're not analyzing to take a trade. I want to show you the importance of support and resistance in the market, okay? Now, for those of you all who have never drawn one, you're probably looking at the chart right now. You're like, oh, okay, oh my goodness, what do you mean? How do I do this? One of the things that can help you is coming to my line chart. All right, coming to my line chart. And my line chart is closing prices. All right, the line chart is strictly closing prices. And so as we look at this, all right, what you can see is like these touches, okay? You can definitely see, you like start seeing these touches that are on there. All right, that's what you're looking for. You're looking for these touches. So if I come down here, you can kind of see where I dropped on these touches in here. You can kind of see where we have touches. Now, remember, this is closing price. Now, sometimes they do wick through that line. So I don't want you to sit here and try to go, oh, okay, well, I need to put it up here. I'm going to bring it down here. I'm gonna bring it, no. Just kind of look at where we get the majority of touches. Do I have 2 or 3 touches? So if I have 2 or 3 touches, you can see right here. The reason I'm marked up down here is I want to show you something. All right. So if I look left in the market, all right, I want you to understand the importance of these support and resistance lines. As I look left in the market, you can see the support and resistance right there. You look left, you can see the support and resistance lines that are happening. You see all these touches that are happening. All I was looking for was maybe like 2 touches, okay? I needed some touches. I needed touches here. I needed touches there. I'm going back. I got touches. So you notice that no matter how far back in the market that I go, okay, now I'm in September of 2020, right? September of 2020. And you can definitely see how it's impacted right there as far as that's concerned. No matter how far back I go in the market, you're going to see that it's going to continue to hit on those same touches. Even if I drop it here, okay, even if I drop it there, what you're going to see is, these touches. Now, once again, what I want you to understand that these are zones around here, all right? There's zones. There is no such thing as a definitive line in the market. I just cannot stress that enough. So you notice that on the higher time frame, what you're seeing is you're able to see like where all these touches happen. So for those of you all learning how know their closing prices. So, what you're seeing is, learning how just come and drop it where you see you get the bulk of the touches, right? So that's what I'm looking for right there. And the reason why the line chart is because it makes it easier to see as you're learning. As your skill set develops with drawing this, you'll be able to do this on the Hikinashi candles. You notice when I flip it back, you notice that you can see it a lot clearer, right? So now remember, I didn't have the lines here, but now I can see it a lot clearer, okay? So on this higher time frame, you can see that where we have our significant ones, okay, where I'm going to be able to put my support and resistance. So this is ultimately, I don't want to do all of them because I don't want to be like, okay, here's your coloring book, you know, as you're learning. But so I want to kind of stay focused and I want to show you something. So what I'm going to do for the sake of this one actually has a few more. So let me do it this way so you guys can kind of stay in this zone with me right here. All right, let me lighten this color up just a little bit, you know, just to kind of do that where you guys could, we could all be looking at the exact same thing. So you notice that right in here, all right, this is where you look at my support and resistance in here. On this higher time frame, I can even put another one right there. All right. Now, what I'm going to do is I'm going to drop down to my hour. All right. I'm going to drop down to my hour. When I drop down to my hour, what you see is now you begin to see more support and resistance within here. Okay. Now I see more. I see support and resistance lines that I did not see on my 4 hour. And so if I change the color just a little bit, so I'm not going to mark them all up, right? Definitely not going to mark them all up, but I just want to kind of make a point. So I just made this one blue. So now you can see where I have another support and resistance line. Even if I come in here, I have another one in here. All right. More support and resistance. Now, why is it that when we do this, you know, why is it that when we do it, it's on the higher time frames, right? Why is that? Now, it's because my higher time frames really, you know, helps me understand. My higher time frame really helps me understand the direction of what the market is doing. You say you hope this video is uploaded to YouTube tonight. As soon as it gets downloaded, as soon as the Zoom downloads it, we'll definitely get it uploaded. So what you're seeing is, you know, that the fact that my higher time frames give me the direction of the market, my lower time frames are all the activity and the movement. But you definitely see that you have more. So why is it that we typically start doing support and resistance on the higher time frames? Well, basically based on what I just gave you, okay? Just basically based on what I just gave you. Now, when I drop down, I can drop down to the 30. And every time frame I drop down, if you guys are looking with me, you're going to start seeing, you see, there's another one that we didn't see before on the other time frame. Let me go down to the 15. I'm not going to mark anything on the 30. So let me go down. Absolutely. Every time frame has support and resistance. You're grabbing it. So now if I go to the 15-minute, okay, I'm going to widen this up just a little bit, okay? So now as I do that, you know, what you're seeing is now, right, we have more support and resistance that we did not mark on the hour, okay? So I have more. So you're seeing more support and resistance that you did not see on a higher time frame, okay? Let's pick a different color. Make it a little bit different. So what we're seeing is other support and resistance that I did not see on the other time frame. All right. So now you see more. But look, it might pause the market, but it's not going to stop the market. It's, remember, my higher time frame tell me where I'm going. So I might get a little pause in the market here, you know, but it might even ignore it and keep going like these do over here. Look, it broke through it, didn't even think about it. It respected it right here a little bit, came on back, broke through it. It wasn't even concerned. Where do we turn around? At the one off the higher time frame. Where did the market shift and turn around? At the one on the higher time frame, which are my yellow ones. Okay. Now, why are the ones on the lower time frame important? Let's go ahead and drop down. All right. So let's get back over here. You notice we're going to have to travel a little bit because of where we put this. So we got to travel a little bit because we're dropping down. Now we're on a 5-minute chart. So now this is a lot wider. You know what I mean? So now as I drop down, what do you see now? I see more support and resistance lines, okay? I see more support and resistance. Now, why did I want to do this tonight? Because what I need for you all to see, let me mark this one. Let me go ahead. So what I need for you all to see and what I need for you all to grasp, right, is the fact that this red one, you don't even see on a higher time frame, but this red one I see on my lower time frame, you know, so you don't even see those red, where those red ones are. Now go down to the minute, I'm going to see even more. Now, of course, we have to ride a little bit to get back over there, but I'm going to see more. Now, the point I'm getting to you now is because now we're trading more than one thing. All right. Now we're trading more than one thing. All right. Now, one day we'll get there because this is the 1 minute chart. So now we're trading more than one thing. And understanding that if I'm looking at a foreign exchange pair that I want to trade and analyze, it is absolutely no way that I'm going, one day we might get there. Seriously. Well, it is absolutely no way that I am going to, under any circumstance, and we might not because it is the 1 minute. So let me kind of, but there's absolutely no way that I'm going to, drop down to this level of a time frame, right? It's absolutely no way I'm going to do that and do any sort of analysis, right? It's just not going to happen. Now, you notice that, why can we not get there? So you notice that as we drop down, now for my HFX, these lines are very important because it's so important for you all to see, and it's so important for you all to know that these impact. So remember, we're looking to buy and close above that line. Okay, we're looking to buy and close. It's a call or a put. It's a put or a call. It's a call or a put or a put or a call. And so you have whatever your sweet spot is, what we talked about last Thursday, 3 minutes, 5 minutes. I even saw 1 minute in there. So whatever that is, that trade has to close. If you do a 2 minute trade, you have 2 minutes to make sure it closes above or below. So I'm gonna come back over here in the current time because we keep having to scan and we're like right here at 10 o'clock and it's time to transition. But I'm gonna come back over here because I want you to grab this, in my current time. Maybe I can show you right here really, really quickly so we can close out. Or maybe not. Shoot, hold on. Go back to my higher time frame, then move over, then let's do it. All right, so what you're seeing is like, you see this here, but then as I drop down, let me go to my 5 minute. You notice that, let's just look at this current space right here. You notice right here is being rejected, okay? I want to change this back to yellow because we're on a higher time frame. You notice that it's being rejected right here, all right? You notice that. So if I'm trading Forex, this is, our analysis when we're trading is don't push up there, don't do this, don't do that, right? You'll be dipping for pips, that sort of thing, right? That you always hear that on the calls. I drop down, now look what you're seeing. You're seeing these rejections. You're seeing the market and all the actual activity and the analysis. I come down to the 5 minute. Now I see all the movement. I see everything that's actually happening. And all of this was like in 1 candle, 2 candles, right? On a higher time frame. Now I'm seeing all the movement and all the activity. And so when I'm trading HFX, this is important because now each one of these candles is a minute. So if I would have took this right here, like this rejection right here, now this support and resistance line, all of these are so important because this one was not important on my higher time frame. This line is not important on my 4 hour. This one is. But you notice, like, look at this, 1, 2, 3, 4, 5. That's 5 minutes. So I would have won that trade, right? I would have won that. If I'd have took that, I would have won it because I need to enter and I needed to close below. So that's what you're looking at. So now the 1 minute is important. But with Forex, when I'm trading that, that's not important. I just know I'm waiting on this to turn around so I can take that trade. So you just have to, so you get to see and you get to understand. And when I tell you support and resistance is your lifeline, support and resistance is your lifeline. Support and resistance is your lifeline. So no matter what you're trading, that's why I wanted to include that in the basics tonight. Because when we go to Thursday and we start talking about this again, for you all that are having this success, you understand support and resistance lines. Everybody I see dropping a 777 in the chat for HFX understand support and resistance lines. So the strategy, BYOB cash out, understanding PSAR flip, don't add to it, walk into it, analyze and walk through it. That is where your success lies. Support and resistance, so very important. Now you need to understand the movement and activity because this would be my entry point for a foreign exchange trade, right? If we had analyzed this, don't go take this trade. We haven't analyzed it. But you know, we would be waiting on this PSAR flip and all of this on this lower time frame, and us to break through this movement right here to take a buy for foreign exchange for it to continue to move up. But for HFX, I'm looking for this PSAR flip, right? I'm looking for that 2 minutes, 3 minutes, 5 minutes. What's your sweet spot? Find it in your demo account and it'll push up. All right, guys, this has been great. You all have been wonderful. This has been BYOB.